traders, this is Blake Morrow. You are listening to the Morning Edge webinar, and just so you know, we have Bank of England Forbes. He's talking right now about the sterling, and he said wants a new approach that puts more emphasis on the underlying reasons why FX rate moves. Also says a new approach suggests implies that sterling appreciation could weigh less on inflation and impact. Um, it's allowed the pound to bounce a little bit. I sold my euro pound on that headline, and then I turned back around and bought it again because I'm like, wait a second, his his um he is implying that exchange rates don't affect inflation as much, and it's like, but that's an opinion. So anyway, the cable bounced and then it's coming back in a little bit. I'm like, that's stupid. What did so I covered my euro pound. I made really good money actually because I bought it at 73 or 72.50 I forget where my entry was, 72.40 something or 50 something. Anyway, and then I sold it at 73 pence, and then I bought it again at 72.99. I just rebought it because I was like, oh, that's stupid. Why did I do that? So I got out and got back in, just to let you guys know. So anyway, yeah, I'm not sure I am. There's just, the speeches just got released regarding all that. Anyway, just wanted to let you know that that's what caused that little cable bounce. If you're watching it. So anyway, interesting. Yeah. So John, the Piplander, we have had an outage, John, for live market alerts for the last several days. It's actually been 3 days, not two. It's been ever since Tuesday afternoon, late afternoon. Our engineers have actually spent the entire week rebuilding the servers. We had both servers, regular servers, backup servers, all go down at one time. I still don't know what's the root cause of the issue, but all I know is they have been rebuilding it piece by piece, and we the alerts should be working after this, hopefully this morning. We would hope to have them up yesterday, John, but no, I will. I haven't even been writing alerts because I know no one's been getting them for the last 2 days. But if you log in, I'm not going to log in at the moment. But if you log in, it says you're not authorized to view alerts. That means they're still rebuilding the servers. But John, if you haven't been here in a couple of days, you've missed all the commentary about it. The chat rooms will be, if you're trying to get in the chat rooms, just go back to your browser history. Go back to Monday or Tuesday, click on that. That's an easy fix for the moment. Eric says, I did get an email alert this morning. You did? Oh, crap. So they're working. You know what? I'll try it after my morning analysis. After we get done with this, I'm going to send out a test alert, see if that works. If that works, we're being that means we're getting making progress. And just so you all know, for those of you that are also, I just want you to know how serious the situation is. Like our CTO, who never takes a vacation ever, like never. Wife, kids, they were on vacation. He was supposed to be off till Wednesday. He got called back early off of vacation, went straight to the co-location facility in downtown Dallas, which is this co-location facility where we house our backup servers. just if you guys, I don't want to tell you specifically where it's at, and I couldn't even tell you. Although I've been in the server room actually twice over the years, but I can't tell you even how to get there. But it's in downtown Dallas or close to downtown Dallas, not too far away. Um, this facility, it's like a building that looks straight out of Gotham City. It's the craziest looking building ever. But the thing about that particular building, which is really interesting, is that houses pretty much every uh, technology company in the Midwest. They have that's like their co-location, if you will. I always figured if that building went down, the internet throughout the Midwest would probably go down. It's like it's pretty crazy place. Anyway, all I know is our CTO has been living there for the last couple of days, literally living there. Like go home to sleep for like 2, 3 hours, take food, go work, that type of thing. Poor guy was on vacation too. Mm. Anyway, okay, let's get to this thing. All right, so let's go to the euro dollar. Let's start there. So here's the euro, and as you guys know, I have an order, and I still have an order out at 113.25. I'm still looking to short any move up to 113.30. So you have to imagine if we do get a rally here, and let's go over to the, I'm just going to draw this. If we get a rally here, like if we rally up to the resistance, we get up to this resistance here, I can I can imagine that the relative strength is going to fall short of the recent highs too, which will probably get a divergent move. So what I'm trying to tell you is any move up to 113 and a quarter, I'm a seller. Okay, 113.25. Okay, um, okay, and that is a range environment currently, and support for the euro dollar today. Well, see this congestion area right here? Okay, if you take that, I'm going to actually, because if you guys are expecting the euro to drop down to like 110 today, I think you're going to be very much disappointed. This right here is the zone right there. So I think anywhere between 112.30 and 112.40, you're going to find some support down here. Okay, so just imagine that that's probably where support's going to be, down in these levels, and don't expect much more than that. Okay, 112.25. I'm going to write down as support. All right, let's go over the cable. Oh, this pound, so frustrating. This is the Bank of England Forbes. So what he did is that article came out right at a nice time, huh? Isn't that beautiful? What timing? What beautiful timing here. I mean, somebody released that article and they were watching the exchange rate right when they did it too. They're like, watch this, suckers. Watch this. Okay, which is obviously very important now. We hit basically 154 and bounced. 154 is going to be support. Resistance today is going to be 154.70. I do have a short in the cable. My cost average is right here at 154.31. All right, so I think resistance actually can be up at 155. Should we get some dollar weakness today? Now, if you guys want to be long the cable, I mean, you can buy it here if you want and put your stops below 154. But if you're going to do that, I'd just wait till we got down to 154 or closer to. So 154 is support. Resistance is 155. If we do see some dollar weakness, the euro gets to 113. Cable gets to 155. It's probably a decent short up there, frankly. Let's go over into the Swissy. Okay, as I mentioned to you guys yesterday on the Lunch Money webinar, I went long the Swissy at 97 20 is my cost average. I still have a bid at one, or at not. I'm sorry. I bought it at 97.20 yesterday. Did I say 197? I meant 97.20. I still have a bid at 96.85. It's still sitting there. I will add if we get down there. But here's the buts. But I think we're pretty well supported here in the Swissy. I think you have to now look at any dip down to 97 cents as an opportunity. Even if it gets to 97 cents and it dips slightly below that, you're probably still going to be happy you bought it at 97 cents. I mean, it's being very well supported down there. Now resistance is at 98.20. It's big resistance too. Why is it big resistance? Because of this big downtrend line right here. Okay, this is a weekly chart. If you missed my little spiel on the dollar Swiss yesterday during the lunch money webinar, I'm sorry. It was a really I was talking about having a couple of trades throughout the course of the year that really make my year. Like, I do a lot of, swing trading. I'll make 50 pips here, 80 pips there, 100 pips there, lose 50 pips here, lose 20 pips there. I have, that's how I make my money throughout the course of the year. However, throughout the course of the year, there's really usually a couple trades, 2, 3, 4 trades that really put me over the edge, puts me on the map for the year. There always is, because I seek them out. It's like I know when to press them. Well, I have 2 trades that are set up like that for me, for us, really, for the end of the year. One of them happens to be the Swissy, because if we take out this yellow downtrend line, and I'll just tell you real quick how I'm trading it and how I plan on trading it. So I bought a little bit yesterday. I was talking at the Lunch Money webinar how I bought a little yesterday. I plan on buying more. Okay, if we can break above this yellow trend line, so we get above 98, 98.50, I'll buy a little bit more. Hopefully that doesn't have to happen until post FOMC next week. Then if we break 99 cents, I'm going to get rather aggressive, okay, above 99 cents. And if we clear 102.50, that's when I put all my stops to break even. And really, that's how I'm going to attack the dollar Swiss over the course of the next few months. And this has the makeup, the genetic makeup of being one of those trades that really put me over the edge this year. It's been a great year as it is, but it could really, really wrap up the year nice on the dollar Swiss. Now, but as I mentioned yesterday, I usually trade in, like, instead of trading a full position size for me, I'm usually, getting in half size positions, third size positions, quarter size positions, so I can get myself into, a couple of different positions to eke out some profits, while I'm swing trading. Very rarely, do I go past a full size position and get very aggressive, because you have to know when to press those types of trades. Well, if you have the Fed raising rates and you have even like 32 out of 34 economists on Bloomberg this morning think that the Swiss National Bank will stay at negative 3/4 basis points for all of 2016. That news came out last night. If you look at that, and then you got the Fed raising rates next year, that divergence in monetary policy is going to put the dollar Swiss up towards 110, if not 120. So I want to make sure I'm on board as that train leaves the station. You know what I mean? Okay, enough about that. I can spend all day talking about the Swissy, but I'm not going to. But you can see why right now 98.20 is pretty key resistance at the moment. So I'll put 98.20, and I don't know if my trend line's correct, so 98.50, I don't know if it's really correct. All I know is somewhere up there is huge resistance. And we're range bound, threatening to go bullish. 97 cents is support. Yeah, and Al also mentioned, says, "Hey, happy trading. Have a great 9/11 day." Yeah, we'll talk about that when we come back. It's obviously we don't want to forget. You know, September 11, 2001 is our 14th anniversary of that event. We'll talk about that when we get back, or we'll talk about that a little bit later this morning, because I don't want to forget, and I don't want anybody else here to forget that either. Dollar yen. Um, Here's the dollar yen. I have. Oh, by the way, I got out of my dollar yen shorts yesterday. I got out of them at 120.70. So I've been short the dollar yen for probably like the last week and a half, and my cost average was, or maybe it was week. No, I think, I've been short since back here. Yeah, like the last week and a half, like right here, and my cost average has been. I've shorted it, made some money, shorted again, made some money, shorted it, shorted. As it was coming up, my cost average ended up on this last run up, happened to be at 120.70 or 20.90, something like that, 120.90, or no, 120.95. It's somewhere like that. Anyway, I got out of it yesterday. I think I took like 18 pips off the table. Excuse me, and I'm done with it. I'm still short the pound yen, but I'm just done with the dollar yen for now. And you can see we're just tight consolidation, very annoying. I don't. I'd really like to short the dollar yen. I just don't see any. I'm I want to be long dollars going into the FOMC, and I don't want to be short dollars. So the dollar yen was kind of not matching what I wanted to do. So as far as the dollar yen goes, I don't really. I mean, look at this chart. How are you supposed to read it? Like, oh, we're making higher highs and lower lows. The hell is that? You know what I mean? Like, how am I supposed to trade that? Higher highs, lower lows. Great, you're expanding your range now. Fantastic. That's exactly what I need. To when you're expanding your range, you're making false breakouts to the downside and false breakouts to the upside. That's a red flag for me to just stay the hell away. You know what I mean? So, anyway, I'll and I better draw back those lines. So all I'm going to do is I'm going to say 121.30, 120.30. Oh, there you go. Easy peasy. 120.30, 121.30. Bias. It's bearish. It is still bearish. And notes. Stay the hell away. Here we go. There we go. Okay. Let's go on the dollar Canadian. So the dollar Canadian, if you were on the Lunch Money webinar yesterday, I bought it then. I got long at 131.95 is my. It's actually 94.50, but it's all right. Who's counting? I'm up 68 pips right now. It's a small position. It's not anything huge. But as I've been mentioning to you guys, I wanted to buy on these dips down here. I might actually sell it here this morning. I worry a little bit more about the Canadian than anything, but yes, Goldman Sachs did talk about crude oil going to 20. By the way, look at that pound come right back down. Stupid cable. Anyway, B, Bank of England Forbes, by the way, his comments, and I didn't read through the whole speech, but based on what I read, because I'm only one person, I can't sit here and do analysis, talk to you guys, and read a whole speech by a Bank of England governor. But from the headlines that I read, he was saying he was saying he proposes a measure where the FX rate doesn't affect inflation so much. Well, how the hell is that supposed to happen? Like, money and the cost of money will affect inflation. So how in the hell are you going to get around that? And so the pound rallied on those comments and probably is pulling back now because everybody's going, what the hell is he talking about? And how's that supposed to work? Like where are you pulling that out of your butt? Yeah, so anyway, so the cable's coming back down because of that. I don't know why we got in that conversation, but anyway, so let's just note that supports at 132 here, resistance here in the Canadian. Just you guys know this wedge is getting tight, like really tight, like it can break out today tight. Okay, 132.90. We're in a uptrend, right? We're in a nice little uptrend here, very bullish. 132, 132.90. 132, 132.90. If we fail at 133 this morning, I'll just I'll just exit. But anyway, um, thanks, Patrick. He just tweeted me some Financial Times on Forbes. I'll have to read it here in a second. Let's go look at the Kiwi. So, so some guy yesterday, so matter of fact, that reminds me, I need to unfollow this guy. A guy that I follow, he looks at fractals, right? And he said there's a I'm not a big fractal fan, if you guys haven't figured it out. I mean, I can pretty much look at any price in the market with any instrument and say, oh, this price, it's like, okay, the the chart that you see here, I'll find a chart that looks just like this, and it will telegraph the future movement of the market. Well, that's all fine and dandy because it's all based on behavior, behavior analysis, if you will. Oh yeah, because behavior is like this. So when you find something that matches it similar, you could be looking at a 30-minute chart of IBM, and it'll look just like this, you know. And so therefore, if IBM's 30-minute chart does this, then therefore the 4-hour chart on the Kiwi dollar is eventually going to do that. Okay. I'm not a huge fan of fractal analysis, especially when you're using like things that really don't matter or match up to each other, right? Like IBM's 30-minute chart versus the Kiwi dollar 4-hour chart. There's a lot of difference between why things are moving, especially in two different asset classes like that. So I had a guy do this fractal analysis on the yen and then the Kiwi. And then when you do that and you don't incorporate what's happening fundamentally, that's just a problem. So guys like, oh, the dollar yen had moved up, so the Kiwi after the RBNZ news should bottom and go higher. Well, okay, I'm like, maybe you didn't hear about the RBNZ. They're actually open to further cuts, and they're actually open to not only further cuts but aggressively cutting further. So what you should do is go find a chart that matches up to the Kiwi dollar that actually looks like it's going to continue lower. and then trying to find a future pathway that looks like that. So if you don't take into consideration fundamentals that are backing that chart or that idea of where the market's going, then you completely miss the mark on why you're following fractals. Ed Matz happens to be really good at fractals because he actually gets the market. You know what I mean? But if you're only following price and that's it, and you bypass everything else, you're never going to get anywhere. You're going to get sideswiped left and right. So, like, uh, like, like Ed does fractals, and Ed's not the person I'm talking about, by the way. I love Ed Matz. Ed Matz is great, and he's like, he's a friend of mine. We chat all the time. I haven't chatted with him in like the last couple of weeks, but we chat all the time. Fred Ed's a great guy, and he's really good at what he does. No, there's another guy that yesterday he's like, you should be, getting along the Kiwi. I'm like, what? I'm like, I don't agree with you at all. Not in the least bit. So anyway, so if you just miss that one basic concept of like, no, you have to. That's why it's so important, in my opinion, not to just look at charts. You have to know why something's happening, and especially when you have such market moving, uh, game changing event like the RBNZ this week. That's a game changer, and if you ignore that, you're liable to get your ass handed to you. Does everybody understand what I'm saying? Am I just talking gibberish right now? I mean, it is 4 o'clock in the morning here, so all right. Anyway, all right. I got to take a break. I just realized it is 4 o'clock in the morning, and I need more coffee. I'll be back in a few minutes. Don't go anywhere. All right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So let's get over to the Aussie. Oh no, I think we're finishing up with the Kiwi, right? Oh yeah. Okay. So anyway, here's the New Zealand dollar. Really big support comes down here at 62.40. You know, if we get a rally actually to 63.50, you just got to look at that as a gift to be on the short side of the Kiwi, in my opinion. The RBNZ really, opened the door for further cuts, and I was going to blog about it yesterday. I just didn't get a chance to do it. I probably will today, but I'm going to probably blog on the Kiwi today if I get a chance. I should. But as we close out the week, but anyway, 63.50, 62.40. Okay. 62.40. 0.6350, and we are in a bearish trend. Okay. Let's go take a look at the Aussie. Now the Aussie dollar, as you guys know, the Aussie dollar is actually propped up pretty well based on the jobs report, the employment report that came out of Australia this week. I still think the Aussie has some downside in it, especially if the dollar starts to gain strength. I am prepared though, and I'm not going to. I'm long the Aussie Canadian. I'm long the Aussie New Zealand. I'm not long the Aussie dollar, nor do I plan on being long the Aussie dollar. What I would do is I would sell the Aussie on a rally if we can get it. But I do think that the Aussie could have some upside in it, but I would not rule out the downside. Because if the dollar does gain strength from here, okay, and we do see the dollar start to really pick up steam against some of these other currencies, we could have a situation where the Aussie dollar, starts to fall back towards this support. Okay, I do think that key support for today is probably going to come back around 70 cents. I don't think anybody who's short this week probably is looking for an exit. I would have to imagine. if you're short the Aussie, you're like, oh, God damn it, this thing will just come down. I'm assuming people are probably feeling a little freaked out if they're short the Aussie dollar, probably looking at it something like this. Okay, I'd have to imagine. So, any dip, maybe even any dip down to 70 and a quarter might actually be supported. Let's see here. Low, high, 38% retracement is really holding this far. So maybe 70-20, okay, would be support. And it's still bearish, guys. I don't want to rule out that it's not still bearish. It's just it's really consolidating. If we get above 71 cents, it's going to turn back to neutral. Okay, in my opinion, if we can get above the 71-cent level and start posting that inverted head and shoulder pattern, then we'll get a move back up to 72 cents. It'll be neutralized, but right now it's still in a very, very bearish trend. Okay. And by the way, a move up to 72 cents would be retesting this broken trend line. I'd be very happy if that happened to sell it. Okay. Dollar index. Okay. Dollar index. Got a little dip yesterday. We got the little dip. We actually dipped below the support. So, now, Jared sent out a chart to me, and I retweeted it yesterday about a little Garley pattern. His Garley pattern basically looks like this. This is the daily chart without, having the intraday charts to go into. His Garley pattern basically looks like this. Okay. So, Jared, good call yesterday. I know you're listening in, so good call. That's J-A-A-Rod. Like I'm Bulake. He's J-A-A-Rod. Not Jared. J-A-A-Rod. J-A-Rod. The K and Peel. Those guys still kill me. Anyway, Sue, that is a 786 retracement that's holding, but we're going to write down 95.20 just in case. 96.55. Okay, so 95, what's the low there? Yeah, 95.20. And resistance is 96.60. Oops, 96.60. And it's still range bound. Okay, let's take a quick look at the peso. Oh, peso's heading down towards support. For those of you that want to get long some US dollar Mexican peso, looks like we're pretty close to support here in a very, very strong uptrend. So 1665, 17, write that down again. So 16, 65, 17. Bullish. I haven't even looked at Nordic currencies. US dollar Norwegian krona is up huge for right now. Why? I didn't check see if there's any data out of Norway, but I would assume that all that crap talking about crude oil going down probably is what's driving the US dollar Norwegian krona higher in a very tight range. Swedish krona, not doing anything. Still very much range bound. Very much range bound. Okay. All right. Let's I think we're done here. And here is your support and resistance bias chart for today. So there you go. And I'm going to take some questions. Let me grab a sip of my coffee.